Welcome once again to the inaugural 2024 edition of the Long Only Podcast. I'm Doug. And after a few weeks off, we are back. Well, we took 1 week off, so it meant it was 2 weeks from podcast to podcast. So, but anyway, the point is we're back now. Gerry, let's do a quick market commentary. The market is marketing right now. So
yeah, we've had, we just commented that in our portfolio for growth anyway, it seems like we had our whole year in 1 month. Finished the year on a very positive note, which is nice. So that, and across the board, pretty much that was the case. We've talked about the more favorable interest rate and inflation environment. I think there's naturally going to be some backing and filling, correcting of that here in the early part of the year. But it seems that we've peaked on the rates and the inflation, and that should start to become more of a tailwind, barring that they've destroyed the economy, which I don't think they have. I mean, so I think. It's election year, generally don't have major debacles in election years. Then again, things are really weird nowadays. So who knows?
Well, you mean beyond the election itself, we don't have major market debacles during election years.
Right.
Generally. 2020 excluded, I guess.
Yeah. Well, all bets were off in 2020.
Yeah. And there was a debacle, but there was also a run up afterwards. So
yeah, it ended up being a crazy year again. I mean, we're saying that a lot lately. It's a crazy environment.
New normal, Gerry. Get used to it.
I still feel that we have not seen, at least as it relates to our companies, we have not seen. This gives you an idea how long term we like to think, and we do think. We've made some transitions over the last 5-ish years, a little more maybe, out of companies that we own for a very, very, very long time, over 10 years, 15 years, 20 years. Many of those changes that we've made over the last 5 years or so, we're still far from having those businesses, the ultimate result that we're looking for, happen. So much of what we're seeing in our portfolio right now is pricing based on total speculation, a lot of guesswork, on the part of the market I'm talking about. So it's a really important time to not get shaken out of good company, good quality names, even some names. And I hate that term, good quality. So I'm sorry I said that, because I think it's an overused term.
It's meaningless too.
It's meaningless because an innovative company that has not turned a profit yet is really just up and coming and getting itself going. On the outside, it looks terrible from if you look at the financial statement, but nobody pays any attention to the innovation. We've talked about innovation being kind of ignored in the last couple of years or more. As we start to see some of these businesses come to fruition, and that doesn't mean that as soon as something happens that more solidifies their business, their place in business, or their, the solidifies that the narrative that we've believe about the company starts to come true. It doesn't mean that, okay, now we sell it. No, because it can go on for 10 and 12 and 15 and more years now, but it's become more established, but it's still a growth story. We have a lot of very young growth stories in our portfolio now that if you were to go back 20 years, 25 years, the names that were sold in the last 5 were like that back then. So we're in another one of those modes right now. And I'm not sure that there's very many managers anymore that think like that. It takes a lot of patience and discipline also on the part of the investor, our client base, because these things can take time. That's just the way it works. So anyway, got a little bit off. We weren't going to spend a bunch of time on markety stuff or technical stuff. So enough of that segment.
All right. Well, one thing I want to say, just add.
Do.
what we're seeing is a lot of our companies are what I would call adolescent. They're still waiting to have their big paydays, and so it is important for investors, both with regards to the companies they're investing in, but also in your personal financial situation, to not over apply what people are saying about the market broadly to you. Could very well be you have some friends who are undergoing some problems, depending on what industry there are. Maybe if it's tech and it's mortgage, they're having a hard time of it, and that's not fun. But that isn't necessarily your experience. So it's important to run these things through the filter and make certain that you're living reality, your own reality. That could sound really progressive, but
we normally get from Doug.
Exactly. Use your own experiences to make a judgment. Take it into account what other people are going through, but use your own experiences both with regards to the companies. Is this a fly-by-night company that's just pure speculation, or is this an innovative company that just hasn't reached its mark yet as its desired point? So all these background things are important to keep in the background and to consider, but don't let them become the story for you if your personal experience is different.